Welcome to The Deal. I'm Jane Searle. Today we're joined by Houlihan Lokey's Head of M&A, Greg Feinstein, to discuss activism. Greg, given that hedge fund activists typically have a shorter investment time frame than many retail and institutional investors, to what extent do they add to the long-term value of a company?
I think that you have to really evaluate each case on its own merits. There are some situations where they really are short-term oriented. They really just want a company sold. But a majority, and increasingly more activists now, are extremely well-studied, well-researched, and they have really long-term views as to something that should change at a company, the capital structure or how the business is structured, maybe a spin-off. And those are things that maybe the company hasn't studied as of yet, and those are things that could add to the long-term value of a company. So I think generally people view it as a constructive element, yet obviously there are exceptions to that.
Right, but despite that, it's felt that activists are unlikely to ever gain broad institutional support. Would you agree with that?
You know, I think if we were here 2 years ago, I would clearly support that. Institutions generally always supported managements in proxy contests, and ISS and the other proxy advisory firms almost always supported managements unless it was an extreme example. That's really changed enormously in the last 2 years. ISS now supports some representation for activists on approximately 3/4 of proxy fights. And a lot of the activist funds that have gotten very large now have institutional investors in them. And what you'll find is institutional investors do often support activists now, and they really do feel like activists have an equal access to them. And it's really a question of just whose economic theory, whose structure, whose plan is going to be more beneficial for the shareholders.
Right, but if institutions do increasingly support activists, is that likely to jeopardize their access to company management? Surely they can't play both sides.
I would think actually the opposite, because when companies retain us in advance of an activist, or even after an activist has surfaced, one of the things that we do is make sure they're talking to all their large shareholders and trying to explain their position, their long-term plan for generating shareholder value. So I think it's really the opposite. I think historically, when a senior management just assumed that their major investors would support them, they didn't spend the time to really explain their plan to these shareholders. They just had basically blind trust. Now I feel like they want to spend more time with their institutional investors, so I don't believe that's the case.
You've also mentioned that activists are adding uncertainty to the M&A process. Could you elaborate on that briefly?
Sure. You know, I think up until a year ago, when you signed a merger agreement or announced a transaction, it was assumed that that was going to occur, that it was sort of over. Now, it's a step, but the final step is getting the shareholder vote. And what we've seen a lot of lately is what I refer to as actually reactive activism. It's after a deal is announced, shareholders think that wasn't necessarily the best deal. So Starboard now on Smithfield Foods is arguing they shouldn't have sold the company in one piece, they should have separated it. Obviously, the Icon activist situation now that's on the, in the paper every day regarding Dell, that is someone who's challenging a deal. We advised Schoenfeld Asset Management when they tried to challenge the fairness of the terms in the merger between Metro PCS and T-Mobile, and we were able to get significantly better terms for the Metro PCS shareholders. So people are now challenging deals after they're announced, and that's a relatively new phenomenon.
Right. Would you say that that's a positive impact on the deal process if it forces companies to do more rigor around the due diligence process?
Absolutely. You know, I think a lot of times companies now are soliciting views of their shareholders ahead of time, and they really have to make sure it's the best deal for shareholders. So, you know, some of the criticism that you've seen about whether a go shop is effective or whether they've actually tried to solicit all the alternatives, I think that people are going to be more careful about that in the future.
Thanks, Greg. I'm Jane Searle for The Deal.